Hi friends, let's take a look at Tezos together. Thank you so much for joining me today. I hope you're doing really well out there. Hope your mining rig is working, Amith, by the way. I hope that started working. And a shout out to everybody that tunes into these episodes every day, of course. Thank you so much. Cheers as well to Ross in Dublin, who continues to share my tweets, and the other people who share those tweets as well. In fact, it's just you've got less easy to remember names than your man Ross. So cheers, thanks so much for all that. I'm really pleased that these episodes are resonating with people, and I'm really just super glad about that. Thank you so much. Okay, so let's take a look at the charts. By the way, tomorrow I think I'll be doing shorter episodes for everything. I'm going to try to, but today is just going to be a usual episode, and thank you so much. By the way, as well, I put on a more somber tone in the previous episodes I put out today. Don't be worrying about me. I'm obviously not fully recovered quite yet. My throat and everything else is still a bit meh, and all the rest of it, but I'm totally fine. I did that on purpose to try and deliver a message, you know, as I do from time to time, because there's more to communication than just the words and body language. There's tone and emphasis and stuff like that too. So I tried a bit of that out today. Let's look at the prices here overall. Thank you so much, by the way, for tuning in. I really do appreciate it. And if you hit that subscribe button, if you're new here, massively appreciate that too. What we've seen in terms of this particular Fibonacci retracement I've got drawn on here from our previous highs down to the lows here, sorry. Let me verify I'm saying that correctly. That is indeed what we've got on the go here. Yes, indeed, that's correct. Thank you. Sorry for the patience, for being patient there. Yeah, so from there down to the previous in the lows on the 15th of May, we have now come up above the 236 Fibonacci retracement area, and we're looking right here, knocking on the door, knock. Can we get into the 3,000 territory? We would like to, and if we could, looking at the 12-hour time frame, that would actually prevent this death cross from coming in. You know, if we could actually get into the 3,000 territory, that would be okay. You can see this diving right down into as a result of this previous price action recently. So let's see if we can see the prices prevent that death cross, sort of, so to speak, from happening. Currently, of course, we're in an area where there was a previous 618 Fibonacci retracement drawn in on the previous, you know, the previous price action towards that, and there could be some resistance in amongst this area. Fair enough, and maybe there'll be a bit of volatility as well experienced around this price action. But ultimately, as well, this is against the Bitcoin pairing, where there's a lot more sort of bigger wallets pushing prices around, and we'll be taking a look at the dollar prices for more indications soon. Just generally speaking for us, if we go up to the 24-hour time frame, we can look here and say, look, the 50 simple moving average at that 3,000, just to keep things a bit simpler for us as well, is generally our first sort of target where we want to get above. A couple of things come into play there. You know, if we get above that area, then we're above our previous high, so we've got higher highs on the go, which is good to see, and that kind of knocks off the stress levels or whatever from this lows and previous lows. Bringing up the oscillators down below, you can see that we spoke about the bullish divergence and the almost that we had here on the go with RSI during this phase here, hoping for a turnaround. I feel like I'll get a lot more positive about this once we get above this 3,000 area yet again. I'm sure you all feel the same out there in the rest of the world. Of course, thereafter, there's plenty of hard work to be done. We don't just, you know, down tools and say we did it at 3,000 Satoshis, but we'll be looking towards those areas when we come to them. And if I zoom out again, sorry, just to draw the point out, that of course, in around this area of 3,200, we've got a big uptake in the VPVR during this overall consolidation period that we've had here, where we experienced, you know, this sort of overall equal tops and stuff like that. And then we can start asking, well, have enough people been shaken out of here? I know not you guys, because generally speaking, 9 out of 10 people that watch these videos are kind of Tezos hodlers, and that's fair enough. This is for the traders, obviously. That's fine. We know that, you know, I know that the audience out there likes to hold on to Tezos. Can't blame you, you know, can't blame you at all. It's a great coin. So, and it's something that, you know, I would like to think about in terms of if I did do that activity of hodling bags or whatever, then that would be what I'd be doing. In terms of trading this, though, I also really like it, and I think it's really good, and it's great and interesting coin to talk about too. So could we see, you know, in terms of this, in terms of, you know, if you're a trader and whatnot, and you might be interested, could we see this, us be able to discuss yet again the potential for a sort of cup and handle here, with obviously a very sort of, you know, a distinctly bearish handle aspect on this one, where a lot of people would have been shaken out. But that's kind of natural when you look at the price action on the Bitcoin prices, you know, recently, you know, and all that versus our dollar prices over here. Now, as you can see, presumably I've not cut this off on the video today. We'll see how that turns out. You can see that over here, this is a green day for the Bitcoin pairing, and of course that's as a result of the prices staying relatively stable in the dollar prices, while the Bitcoin itself has actually had a bit of a has had a more of a downward price action day of a couple of percent movement down there. So we've had that relative effect there happen for us, and that 3,000 area I think speaks, you know, volumes really in that in terms of the stability of your finances invested in Tezos, staying above that 3,000 Satoshi area in terms of securing, you know, storing that value for you. That's really what I want to see happen here with in terms of the Bitcoin pairing, so that we can, you know, think about this as being a really good value investment over the longer period of time. For instance, you know, when we move above this 50 simple moving average, then on average, you know, you're doing well. Had you bought it in any time in the last 50 days, then you've managed to retain the value in the face of, you know, in the face of volatility in the Bitcoin pricing area, you know, so that's something to look at, and all the rest of it, and we'll be keeping an eye out for that going forward. So then what about over here? Oh, actually, you know, one thing I did discuss as well is that there's always, you know, the nature of this divergence is partly having been driven by the triumvirate, you know, the tripartite dynamic, the triangular love triangle dynamic that you have of where you have the Bitcoin pairing versus Tezos and the dollar pairing versus Tezos determining the price action, and that the arbitrage that goes on between these things when you're seeing a relatively stable period of time versus the dollar, and the Bitcoin price is moving a lot, that to an extent, you know, that there could have been at some point some divergence coming in here, bullish divergence coming in purely off the back of that dynamic, you know, and because of that, then of course it just draws it in even more for me about why I want it to go above 3,000 satoshis here, so that I can say that this is, like, you know, that there's an organic element to this rather than just purely just the arbitrage bots creating this scenario for us, and very little in terms of actual trading going on from market participants who, you know, are organic instead of robots. Let's go over to the dollar prices, and look, you know, this kind of says it all for us in terms of this crappy drawing that I've got on here. If I just remove it though, you know, as you can see, what I'm about to say here is, are we going to be sort of experiencing this continuation of this concept that we've got drawn on in here? This only has a couple of wicks to the downside touching it. I could have it positioned up here, for instance, and we could consider just the bodies, you know, if you want to. In terms of the argument for the top side of this, it's actually harder to do that right now. So let's just kind of make a wee comparison here for people. Again, of course, I often talk about things that are really helpful, I think, and so do some other people. Cheers, Ross, by the way, again, you know, cheers for trying to encourage people to become market participants and to learn about trading and to be fully knowledgeable by watching these videos. I really do appreciate you doing that on Twitter and tweeting that. I really appreciate it. Anyway, so yeah, let's have a wee comparison. Now, I've drawn these in with wicks. This works. If I draw this in and just use the bodies currently, then you could be looking at this and asking a couple of questions. You know, are we breaking out or faking out from this? And that's why when you use more than one aspect to your trading and to your technical analysis, it helps, you know, give you more context and make you more informed decisions. So, you know, as I moved that down there, it became revealed, you know, just how close to this horizontal line that we have in here. And, you know, if you add in a couple of extra things to your trading, you won't just immediately be thinking about breakouts from this necessarily. You'll be looking towards this and thinking, is this going to be a profit taking line where actually, you know, some of the momentum gets dragged away from the market as people take profits on their trades? If I get a measuring stick and kind of stick it between the two parts of this, you know, this wedge shape, and stick it up there up above, of course, you know, you could be looking for a breakout towards above that $3 area, but really, you know, we've got these areas in between that we can look to beforehand and say, will we stub our toes along the way? And another thing that we can look to as well, if we just take all of the drawings off the chart, is to simply, you know, don't get too distracted by your infrastructure that you draw in and around the price action, you know, and remember that, you know, this river that flows has its own natural meandering banks that get put there, and we deposited an awful lot of silt over here, and we got a bank up here that you could think of where their previous high was, and of course at 293, that's going to to be an area just purely looking at in terms of just looking at the charts and going, well, look over here, this is going to be an area where we could have questions coming in terms of liquidity and whatnot. It's the head of a head and shoulders, which is kind of not very visible. Go down to 12 hours. It's the head of a head and shoulders kind of thing that came into play as we saw the prices drop down to this area here. There's going to be some sort of potential here for profit taking, of course, along the way up. Now, putting all the price action back onto the charts, though, we can see that in the VPVR, which is an analog for your liquidity and your supply zones, essentially, we can see that there's a drop off just here. So if we do go above that 293 area, then we can anticipate 320, where our previous consolidation at a high area was before the drop off here previously at 320. So we can look towards that there as a potential target next for us. And if we go back here, stick all this on, and then remember, that's where our measuring stick comes in. Well, actually, that's 311 that it's there at. But of course, put this back wick to wick, take this over, stick it down a bit, stick it like that instead, put it up here, and you're looking up towards 350 or so. But like it's always debatable where you draw these things in from. Really, you'll find that people do it in all sorts of ways. I'm doing it in the sort of the laziest way, it's just the laziest way. And really, the benefit from this isn't really so much about about using this as some sort of, as how you would trade it. I think that you have to look at a layered solution to trading, as opposed to just simply measured moves. Now, if this had just been a flag of some sort, you could even measure the movement up towards it. Now, this is completely inaccurate, but you could almost make the debate for it. Now, you shouldn't really. Another one that you could do is just from the previous low here up towards this here. Obviously, it depends on what sort of shape you're looking at over here, but generally speaking, the way that these classical pattern charting things work is that they really just define an area where you can say this is this phase and the previous phase, and you can then say, well, if we take the measured move from the volatility from within the current phase, what is it? Or if we take the volatility that led up to the phase, what's that? And we can compare that towards the price action. So that's one way that you can do it, and you can look up towards there again at 350 as well. And these things kind of tend to have some sort of overlap with them in terms of the way they work. But of course, if we look at here, there's a 786 coming in there. If I just stick to the 08, by the way, something that not everybody knows is it doesn't matter what order you put these numbers on. If you are editing your Fibonacci, it's not going to appear in the wrong order. Some people think that. I think it's patently obvious that it wouldn't, but there's another little tip for you. If we put 886 on there, you can see that it comes in at around that 360 area. So we could see turnarounds in prices there of this if we don't want the trend continue towards to have the overall upward trend here. If I just stick it on, say, the 2 day, so if you wanted to see the prices turn around, they could happen in around that area as well, where we have this 350 area. So that's what we'll be looking to in terms of the bullish case scenario. Now let's just revisit this now that we've got the FOMO on there. Put that measured move back down and say, look, if you're looking at this going, oh, that's tasty, and you're licking your lips thinking about how amazing it would be to get that full measured move up there, let me just remind you then again that you can stick this back inside of this wedge, and theoretically, of course, you could get that full sort of value to your account in terms of shorting this down the way. And if that were to be the case, then you could be looking down to 220 and 230 as your targets, as we know from having discussed this previously quite a bit. That would include then a lower low as part of this overall formation, and we'd be asking at that stage, is that low coming in, for instance, here in the 2 day chart, is that coming in with bullish divergence on it? If we go over to the daily chart, you could say, would we have having bullish divergence on this if it did come down towards these areas, say 230, for instance, again, could we be looking at that? And that may be an area and a time frame for you to think about re-upping on your positions or whatever. But of course, just a final point to go back to sort of full circle back where we started again and say, in here at this 230 area, or this 236 Fibonacci retracement, we have at 256 is where we want to see the prices maintain themselves above. And let's just go over to Joke Land, shall we, as well, where we have all of our chicken scratchings on, and celebrate the fact that we're above the 258. As you can imagine, we obviously want that 258 line to hold. If not, we're looking at this 230. That's all part and parcel of the same story. And there's a touch of bullish divergence on this particular chart here, which didn't show up on the other charts, and it's hard to know which ones of these is being manipulated, by people people. And when I say manipulate it, I don't mean it in a nefarious way. I mean in order to capture liquidity for bigger accounts, because they have to assess things like slippage, stuff like that, when they're doing their trading. So they have to manipulate in order to successfully trade within the confines of what's completely legal and normal and is a healthy functioning part of the market. And if you think about it, the analogy of whale and fish does work quite well. If you've ever watched a documentary, say the BBC documentary about whales, and you see all these wee small fish just swimming around beside them, it's not that the big whale is manipulating where the small fish go. They're all actors as part of an ecosystem, and that's what you kind of have to bear in mind in terms of like nefarious manipulation, which is a different thing altogether. So that's my question here: is is the BTC site showing up with a bit of bullish divergence on here between these previous lows? Like, is that a positive thing for us? Perhaps maybe it is. I've literally got like no trust for the likes of Coinbase. I use them, but I don't trust them or whatever. So but this is organically going up and everything's fine. Just wanted to throw that point out there, something to think about for after you got bored looking at lines and studying different textbooks about trading as a relatively new trader out there. Then dive into conspiracy style madness theory stuff about manipulation. Of course, all of that's generally spoken it's pulp fiction, most of it. But anyway, let's just see how this pans out. Thank you so much for tuning in. Like I say, we'll be doing much shorter videos in the future. I'm not 100% sure I'm still showing up on my camera right now. I'm going to assume that I am, but if I amn't, then thanks for tuning in and sticking with the video anyway. Share the video with a friend you've got one that you think would like it, and yeah, of course, don't be shocked then in the tomorrow when the episodes are going to be tighter. I'm going to endeavor to do that, and it should still be high quality stuff. And again, thank you to all of the people who are proactively out there encouraging people to come and join the community. Remember, a friend of yours is a friend of ours. That applies to everybody, and you're not the first person to join along here, whoever you happen to be. Welcome. If this is your first video, you're not the very first person to get to the end of a video for the first time and think he's a mad guy talking about a friend of yours is a friend of ours. But genuinely, your friends will be then our friends and their friends and their friends thereafter. And if we get this big, friendly, positive community together of people who like this particular style of technical analysis, then wouldn't that be a great thing? And as we all develop as traders, we can all help each other. And I'm looking forward to the day that actually starts getting a feedback mechanism for me as well. Can't wait. So join to encourage everybody, no matter the experience level, to get involved in the community and hopefully teach me a thing or two as well. Catch you later. I'll see you in the next episode.